Smart money is leaving the Australian retail sector. Let's have a look. Hello everyone, I'm Florian Heise and welcome to another episode of Heise Says. I've got my morning stein of coffee and I thought we would start today by having a look at this article where Sir Frank Lowy, essentially the founder of retail in Australia, has severed all ties with the sector. Is this the case of smart money leaving retail? Kind of ties in with a lot of the other things I've been talking about with regards to a recession in the retail sector. And remember, we'll just have a look at some data from Trading Economics before we jump into the article. Remember that about 10% of the workforce of our nation is employed in the retail sector. So it's going to have a big impact on Australia, more than some people might realize. So let's have a look here. Now, what I want to look at, and we'll just jump to consumer, I want to look at consumer credit. And this is an important one to consider. Now, if we look here, you can see consumer credit has just shot up, and we'll zoom out to the max data. You can see steadily going up, and there's this little spike here. What could that be? We'll go into here, we'll go to 1 year, and you can see here just before July, so June, just when we were announced tax cuts or tax rebates, it's shot up. Boom, it has definitely shot up. Didn't happen previous year, did it? So that's a big jump, and a lot of that is just spending on discretionary items. Big portion of that is credit card debt, those type of things. Maybe Afterpay as well. I will link to my video on Afterpay I did, and I'm just checking the time. 1 minute 50 in the card above. You can have a look. So, guys, that's one thing to consider. There's been a big jump there in consumer credit. Also, consumer confidence or sentiment, it's gone down. It has gone down recently. So those are two things that we need to take into account. Unemployment has slightly gone down on the trend estimates. I prefer the Roy Morgan data, so I think it's probably good news that it will maybe stave off QE for a little bit longer. But so not good signs in this sector. So let's have a look at this article. Let's have a look. So Sir Frank Lowy has severed all ties with the retail behemoth he created more than 50 years ago with the sale of his remaining stake in the Scentre Group. The Lowy family group sold its 4.5% interest, or 206 million shares, after trading on Wednesday to UBS, which then went to market with a bulk trade. That's a big chunk. Investment bank UBS confirmed the sale to a range of institutional buyers had been completed for $815 million. Investment bank UBS confirmed the sale to a range of institutional... Okay, I already read that again, but, just emphasizing it. So Frank Lowy exits Australian retail sector with Scentre Group sale. UBS was seeking buyers for shares at $3.95 each, which was a narrow 1.3% discount to the closing price of $4.01. The investment bank told funds the vendor was selling its direct security holdings in full. So all of it's been sold. The sale marks the end of an era for Sir Frank, who is considered to be the founder of the Australian retail sector. Sir Frank, together with John Saunders, built the Westfield shopping centre empire from a delicatessen in Sydney's western suburbs in the late 1950s. I mean, that's an awesome story, isn't it? Built it from a delicatessen in Sydney's western suburbs. Yeah, you kind of see that happening, can't you? Kind of see that happening. In 2014, Westfield undertook a major restructure and spun out the Australian and New Zealand malls to create Scentre Group. In December 2017, Sir Frank and his two sons, Peter and Stephen, and sold the international business to the European Unibel Roads co-empire for $22 billion. So, that's a drastic move, and I say it is of significance because we also have other sectors moving out of the retail area. Now, before we look at another business that's selling out, let's just get a bit of an overview of the retail footprint from Australia. So according to Urbis, Australian Shopping Centre Industry Report 2015, this is the latest data I got, but it still gives us an indication. There were 1,753 shopping centres in Australia, which exceeded 1,000 square metres of gross lettable area. And they comprise 67 regional shopping centres, those with at least one department store, so one anchor store, 286 sub-regional centres, i.e. those that include at least one discount department store as the major anchor tenant, 1,104 neighbourhood or supermarket-based shopping centres, those that include at least one supermarket as their major anchor tenant, and 107 CBD centres. This number also includes 187 factory outlet centres and theme centres, which are often categorised as shopping centres because they've adopted the shopping centre format. That is usually a single enclosed centre which houses a number of retailers. Note, this data excludes the homemaker large format retail centres. These shopping centres contain more than 65,000 specialty shops. And these specialty shops, a lot of them are, small business people. And they're feeling the pinch. And I'll look at another article later today from the ATO where small businesses are the ones that are probably the most indebted to the Australian Theft Organisation, also known as the ATO. The advantage for retailers who lease space in shopping centres is that customer foot traffic can be much higher and more concentrated than in other retail locations. And see, this is the thing here, the foot traffic is the big issue. And you'll find now that a lot of these centres, and I'll do some more field trips, people responded to the Australia Fair one well, where they've revitalised or they've had to, invest a lot of money to create experiences. And one example is down the Gold Coast at Robina Town Centre, where they've made this whole new kitchens experience. But the problem is when they create these new zones like experiential food and all these gimmicky things, really it's just overpriced hippie food. They're often cannibalizing from another part of their own centre. So the food courts will have a whole lot of issues. They'll lose traffic and that type of thing. So we'll see how it goes. I think it'll be worth looking at a few of them, because there's a lot of refurbishment of these centres that's happening. So leasehold also has the advantage that retailers don't have to utilise capital to buy freehold, thereby reducing their property risk. This means the real estate risk can be carried by the investor in the shopping centre, not the retailer. Yeah, that sounds good, but you're taking all the risk in a way. I remember when I signed a retail list, there were so many requirements for business planning and this type of stuff because of the mum and dad getting just decimated in these Westfield leases. The leases are so expensive. And what's even more BS is that if you're a small business owner, they will take a share of your profits. They'll take a share of your profits. You'll have taxation in the shopping centre too, which I couldn't believe. I couldn't believe people put up with that. After you're paying all this money for rent and then they want to cut your profits. That was probably just my naivete, but damn. So according to ICSC research, Australian shopping centres contain around 25.2 million square metres of GLA, which accounts for around 46% of the total retail space in Australia. This equates to approximately 94 square metres of GLA per 100 people in Australia, which is relatively high by world standards, although not as high as the US and Canada. So below is a table of selected comparable markets. So this is good to give us a bit of an estimate. Our population has increased since this data, and I'm sure the areas have increased, but it's we're number 3 in the world with the amount of GLA. Look at the states per 100 people. More than 1 metre. Okay, more than 1 square metre in shopping centre in the United States. You get 2 metres for each person in the United States. So this is why there are so many just completely abandoned shopping centres there. Well, the market will provide. Canada is doing pretty well. They get more than in Australia. I need to contact them and see if they've got any updated figures. So there you go. There's a good, just an overview of it. Now, I also want to bring your attention to some more information. And this is from Stockland's financial year 2019 results. And their focus is on sustainable returns. Now, I went through this previously because, the return on equity, their profits were down Statutory profit down 69.6%. But if we go here a bit further down, so this is the interesting bit here. We continue to execute on our strategic priorities during the challenging conditions for the retail and residential markets. We have achieved strong momentum with our planned retail divestment program, with 505 million transacted exceeding the initial 400 million target. We've finalized a 50% capital partnership for our Aurora community. These initiatives are enabling us to accelerate our workplace and logistics development pipeline, which now exceeds 2 billion, and the restocking of our residential land bank to position us effectively for the future. So this is interesting. So they're restocking their land bank. But if we get down here, so achieving 505 of retail town centre divestment. So they're selling their retail centres. And we'll go down here. We will continue to assess up to a further 500 million of non-core retail divestment over time in a disciplined way. Stockland is selling $1 billion of their retail portfolio. And it looks like they're putting a lot of it into land bank as one element of it. So what else does that tell you about the retail sector, guys? Looks like the smart money is heading out. What do you think? Let me know in the comments, everyone. Please like, share, and subscribe. If you like the type of content I'm producing and you want to help me produce more, I have a Patreon and a Subscribe Star, and I appreciate all your support. I also have affiliate links, where if you go to buy something using my Amazon link, I get a small kickback, and it doesn't cost you anything extra. Or just continue watching and keep sharing the content. I really appreciate that, and I'm quite humbled that the channel is growing. So guys, take care, and I'll talk to you later today. Bye for now.